Can I have your attention, please? Can I have your attention? We probably need to get started. Good morning and welcome. I'm Ted Tozer. I'm the president of Ginnie Mae. It's our pleasure and honor to be with you today. Thank you for being here at the second annual Ginnie Mae Summit. We have a record crowd, about 600 people. And in fact, we had to cut off registration because of the space constraints. I also want to acknowledge some of you very special guests who come all the way from Japan to be with us today. If you could rise so we could acknowledge you, our people from Japan. Thank you. I think you all know, as we do, it's a very important time in the mortgage finance industry. We're operating a market that is changing rapidly, and the stakes are very high. Housing financing reform is stalled in Congress, and banks are not lending like they used to. During the next couple of days, you will hear a lot about how Ginnie Mae is adopting to make sure that our program and our guarantee, which is the heart of the Ginnie Mae program, continues to be a successful story, turning a profit for the U.S. Treasury every year. The themes you will hear in the next few days will evolve around transformation, partnership, and opportunity. The first, transformation, is all around us. Today, we will release a white paper that outlines our views on the crucial issues we're facing today. Partnership, that's why we're here. Ginnie Mae is a product, and you choose to use it. That makes us different than other government agencies. The third theme is opportunity. It's becoming a watchword for our keynote speaker, who is honored to introduce you this morning. We can work together to create opportunity, but we need leaders to help us. Champions who believe in the American dream of home ownership, of a decent, affordable home for everyone, and who knows how to bring people together to create opportunity and accomplish goals that are within our reach. Today, I have the honor of introducing a proven leader, someone who is already making waves, someone who has the confidence and also the knowledge and leadership ability to make a difference. He is transforming HUD and Ginnie Mae, urging leaders and staff to work together, and reminding us of what is at stake. I believe he is someone who can and will create the private-public partnership that will finally, once and for all, lead housing out of the Great Recession. Julián Castro was sworn as the 16th Secretary of Housing and Urban Development on the 28th of July this year. He has wasted no time in telling HUD employees exactly what he will focus on to ensure that we, including Ginnie Mae, operate transparently, efficiently, and effectively to champion the people we serve. He is charged with one goal: giving every person, regardless of their station in life, new opportunities to thrive. When I asked him to come here today to talk to you, he didn't even hesitate. He told me that he was excited to be here because he understands the importance of your role in Ginnie Mae's success. Before coming to HUD in July, he served as the mayor of San Antonio, where he quickly established a reputation as a national leader in urban development. His decade of downtown initiative in San Antonio's Center City and older neighborhoods has attracted $350 million in private sector investment and will produce more than 2,000 housing units by the end of 2014. So he knows the power and the value of the public-private partnership, like the ones between you and Ginnie Mae. He was named the World Economic Forum's list of young global leaders, and Time magazine placed him on its 40 under 40 list of rising stars in American politics. I can go on, but I'd rather just introduce you to someone who knows how to make a difference and who is already proving that on the national stage. Ladies and gentlemen, please join me in welcoming the Secretary of Housing and Urban Development, Julián Castro.
Thank you very much for that introduction, Ted. I appreciate it. And to the entire Ginnie Mae team, I want to thank them for their great contributions over at HUD and more importantly, their great contributions to our nation. And to all of you for taking part in the 2014 Ginnie Mae Summit. Thank you for being here. In particularly, I want to thank the representatives of the Japanese Housing Finance Agency who traveled across an ocean to be here. Where are they at? Ohayo. Yokoso. Good morning and welcome. Thank you for being here. All right, I know we also have folks from across the United States. Anybody here from California? All right. How about New York? Anybody here from New York? One person? You got to have more than that. New Yorkers are traditionally a little bit more jazzed up than that. How about anybody here from Illinois? Florida? Anybody here from Idaho? One person? All right, well, how about the great state of Texas? All right, they give me a little love there. Well, as y'all may know, this is the beginning of my second month at HUD, and I have to say that I've enjoyed every minute of working with a great team over at the department. My wife and daughter moved up about 4 weeks ago, and we're adjusting well, except for two things. Trying to find good iced tea and trying to find good barbecue. In fact, we were at a place a couple of weeks ago on a Saturday, and they came and served us our barbecue, and everything was good. You know, they had a couple of different sauces, including a Texas sauce, and the iced tea wasn't bad. And, you know, I told my wife, "Oh, this is pretty good," and then I noticed that on the intercom, instead of hearing Willie Nelson or Garth Brooks, it was Pearl Jam. And I said, you know, it's just not quite the same here. But I'm having a great time working with a dedicated staff, including the staff at Ginnie Mae. And I'm happy to be here this morning. We all gather at a moment when our economy is growing, at a time when American businesses have created 10 million new jobs over the last 4.5 years, the most since the late 1990s, when auto sales are at their highest since 2006, and the housing market has gotten stronger, with home sales, starts, and values all rising in recent years. In fact, our nation is making progress across the board, and HUD is focused on ensuring that these opportunities reach every American. In fact, at HUD, we think of ourselves as the Department of Opportunity. Last week, I gave my first major policy speech as secretary and started with a subject that some have shied away from in recent years: home ownership. In fact, I stated very clearly that it's time to remove the stigma associated with promoting home ownership. When done responsibly, home ownership strengthens communities and boosts our economy. It helps families put down roots and secure their financial future. In short, home ownership is the cornerstone of the American dream. Unfortunately, today, this dream is out of reach for far too many Americans. Many say that credit was too easy to get a few years ago. Today, it's too hard. According to the Urban Institute, the average credit score for loans sold to GSEs this year is roughly 750. And currently, there are 13 million people with credit scores ranging from 580 to 680. And in some ways, the problem is getting worse because of the retreat of some of our most important lending partners. So as today's theme indicates, solving this challenge requires the power of partnerships. I want to send a simple message to lenders, including those in this room. Let's work together. We share a common interest to see a robust, healthy housing market where those who are ready and responsible can buy a home. We can advance this interest and move our nation forward, but that takes partnership. So let's come together to secure the dream of home ownership, not only for ourselves, but for generations to come. We've got to be creative and find new ways to deliver for the American people. And that's exactly what Ginnie Mae is doing. As you know, Ginnie Mae plays a unique role in the marketplace. It issues the only mortgage-backed securities to carry the full faith and credit guarantee of the U.S. government. It provides a platform that works for our private sector partners while providing the low-cost financing that helps responsible folks buy their first home. This past spring, Ginnie Mae reached an incredible milestone of $1.5 trillion in outstanding mortgage-backed securities. We've almost doubled our issuer base in just the last 5 years. We're providing a stable and low-risk opportunity for capital, which is enabling more Americans to own a home. And we're not content to just stick with the status quo. Ginnie Mae is thinking of new ways to help more Americans to realize their dreams. In fact, Ginnie Mae has stepped up its work with housing finance agencies, helping low and moderate income folks buy their first home. We're kicking off a pilot program to give small financial institutions more access to the secondary market. In partnership with the Federal Home Loan Bank of Chicago, the effort allows members that do FHA, VA, and rural housing loans to access our full faith and credit guarantee and get the execution that provides for their loans. Participating community lenders will get a better price in the marketplace and use that capital to make credit available for other loans. We're going to build on this successful pilot program, and we'll soon launch a nationwide effort in the first quarter of next year so more lenders can benefit. These are the types of partnerships we need to accelerate for progress. Ted Tozer and Michael Drain will speak later on some other important changes and programs that Ginnie Mae is undertaking. But the bottom line is this: Ginnie Mae will continue to innovate to best serve the American people. And the FHA will do so as well. At FHA, we've launched a blueprint for access that has two main parts. The first part is HAWK, Homeowners Armed with Knowledge. It allows homeowners who commit to housing counseling to qualify for reduced mortgage insurance premiums. This will increase the pool of responsible borrowers and save the average FHA buyer nearly $10,000 over the life of a loan. It'll also strengthen FHA's financial health so it can continue to assist underserved communities for generations to come. The second part is clearing up our quality assurance policies to reduce uncertainty for lenders. In the wake of the crisis, we've seen a lot of frustration from lenders when it comes to their FHA business. Many have been reluctant to lend because they fear unanticipated consequences. They need to be able to manage their risk better, and so does the FHA. So we're making it easier to partner with us by overhauling our single-family handbook. It brings together 900 mortgagee letters and other policy guidance into a single document. By clarifying the compliance process, we're giving lenders the confidence they need to lend, while also protecting our financial health. Our nation and our economy have come a long way in recent years. And although we still have a way to go, there is tremendous momentum. At HUD, at Ginnie Mae, at FHA, we're committed to keeping up that momentum. HUD is going to spend the next 2.5 years working to give every American a chance to get ahead. We know that we can't do this alone. We need you. And so I want to reiterate my message to lenders. Let's work together. Henry Ford once said that coming together is a beginning, staying together is progress, and working together is success. I look forward to working with you all to advance these programs and achieve success. Together, we can ensure that every American who is ready and responsible can buy a home and achieve their American dream. Thank you for inviting me here today, and I hope you have a wonderful summit. I think I'm going to take some questions. All right.
Great. Any questions for the Secretary?
Thank you all for coming. Only questions from the conference attendees. Any questions, just let me know and I'll race over to you.
Somebody's got to be the brave first one, you know. Anybody? There you go.
All right, excuse me. Just going to lean just a little bit.
This is more of a comment, and I just want to applaud what you're saying about clarity with your manuals and your binders. So many times we deal with different Hawk centers, and they have different interpretations of the rules that are out there, which really does add to confusion, hesitation, and just not the type of customer service we want for our people. So thank you.
Sure. Thank you for the comment, and just know that we do hear the issue, and we want to do everything that we can to streamline the process as much as possible to ensure quality and also to reduce uncertainty. That's our goal. And Ted is working hard on that. Cara Galante and her folks at FHA are working hard on that. And all of us at HUD are very much committed to it. So thank you.
Good morning, Mr. Secretary. Thank you for coming. Mark Jones from AmeriFirst in Kalamazoo, Michigan. One of the concerns that FHA lenders have with the clarity, and we do appreciate it, it seems like some of the things that are coming through to us now are more form over substance. In other words, if we write a very good reason, well-reasoned credit quality loan, but we don't check the right box, that we're going to get penalized. Can you give us some comfort that that's really not going to happen? I mean, I hear you say, let's work together. Let's work together.
Certainly. So, well, first of all, thank you very much for that insight. We want this to be meaningful collaboration, and so it's very helpful input. Of course, there are always two things that we need to get right, usually. It's form and substance, but you don't want the form to be so draconian that it really gets, it injures the substance. And so I would love to get more input and see how, as we revamp some of these things, we can get it right.
Perfect.
So thank you for the comment.
Thanks so much for being here also, but I'm having a little bit of deja vu with the home ownership comment, which I love the idea, but how are we going to ensure the credit quality once we go back to those lower FICO scores again?
Yeah, thank you. That's a great question. In fact, I think that that's right at the heart of folks who wonder, well, why would we promote home ownership now? And they associate it with what happened before. The first thing I would say is that I believe that controls have been put in place on both sides, on the lender side and on the public side since then, and that the pendulum has just swung too far in the other direction. The credit overlays that are in place mean that even during normal times, not in the lead up to the housing crisis, but let's go back 15 years or more, that folks who are responsible and ready to own a home, who would have been able to access credit back then, under normal times are not able to do so now because the pendulum has swung so far. So I think you're right to raise the concern, and the issue is, how do we achieve a balance? Like anything, how do we ensure that the lessons that we learned over the last few years are utilized so that people who get access to credit are responsible, they are ready, but also that folks who have demonstrated a decent track record and who in normal times would get a loan are able to do that. And there are millions and millions of Americans who fall into that category who right now don't have access to credit. And we want to change that in a responsible way. So thank you very much for the question.
We have time for one more question.
Hi, I'm Marie Lockwood from Ocwen Loan Servicing. Thank you for being here today. With the HUD just announced the assignment of a new management company. Do you see a lot of changes upcoming with that?
Thank you very much for the question. No, well, the answer is that I'll have to look into that. I'm not specifically familiar with which one you're referring to, but we'll get back to you. If we can get your information, I'll get you that. All right, y'all. I hope that you have a wonderful summit, that it's productive, and please know that we're here to listen and to work with you, and as I said, to do everything that we can to ensure that opportunity is expanded out there in our country. Thank you.
Thank you.